It isn't even winter. Christmas has not even happened. Yet the real estate market is already starting to turn in the fall. The fall is already proving to be quite brutal when it comes to those around the country that are wanting to buy a home and are faced with a mountain of problems. One being incredibly high mortgage rates that we have not seen this high since the year 2000. Fall is proving to be a very big turning point in the real estate market, and there is about to be so much more headwinds towards the real estate market coming in to this winter. I am going to reveal to you 10 cities around the country that are falling right now. And if you are planning on buying a home or you are planning on selling a home, you may want to stick around to see this list. Over 61% of sellers have already cut their asking prices. And if you are planning to take out a 30-year mortgage, watch out. Freddie Mac, the mortgage giant, has reported that the national average mortgage rate has gone up for the 5th week in a row and is now a whopping 7.6% as of the 2nd week of October. It's not a big shocker to find out that year over year, existing home sales have been on the decline for 3 consecutive months. In fact, it has dropped by 0.7%, and that's not just in one region, it's all over the US. The fact is, inflation has gotten out of control, and even the Federal Reserve is having a hard time tamping it out. Jerome Powell has been on record saying that you, being the economy, is about to experience pain, and that is already being felt around the country. No matter where you live, there is a fast slowdown in real estate sales. Quite frankly, real estate agents are having to brush off skills they have not needed in over 3 years, and that is the idea of having an open house. Before all of this started and mortgage rates went skyrocketing along with home prices, insurance costs, and property tax, real estate agents enjoyed the fact that they could merely list a property and have 20 people wanting to buy that property within a mere 72 hours. Now, there are crickets. Buyers are not lining up because buyers do not have the money to be able to purchase a home. So real estate agents are having to dig deep in their book or their bag of ideas to be able to market and sell these properties. But still, buyers are not showing up. The National Association of Realtors has reported that all major regions are posting declines in home sales. Sellers are struggling to find buyers, so the prices have recently dropped by thousands of dollars according to the real estate website Zillow. It's a tough market out there for sure, and home prices are always fluctuating. But is this just a temporary dip, or a good time for buyers to be on the lookout for deals and for sellers to be patient and wait for the market to pick up again? Let's look a little deeper. But before I reveal these 10 cities around the country that are seeing big house price cuts, please take 2 seconds and help me by hitting the subscribe button, because to get more information out there, I need to wake the algorithms up. Number 1, Denver, Colorado. Denver, Colorado recently experienced a drop in housing prices with a decrease of 1.4%. This is also reflective of a longer-term trend, as there has been a 17% decline in prices over the past year. Comparing it to data gathered by Zillow, this housing crisis is even more severe than the one in 2008. Looking back to the end of 2007, housing prices in Denver were at 1.3%. But today they have jumped to a staggering 1.4%, and things aren't looking up for the market. In fact, it appears that prices may continue to tumble further due to various economic factors. Number 2, Portland, Oregon. If you're considering buying a house in Portland, you might want to hold off for now. In the month of June, the value of homes in Portland experienced the 9th biggest drop in the country. The bad news doesn't end there. House prices went down 1.6% this month alone, and things are looking bleak, with an annualized pace dropping 20%. Number 3, San Francisco, California. The California real estate market has been hit lately. In August alone, San Francisco housing values have decreased by 1.8%. This is a pretty big deal, as it has the potential to turn into a drop of over 22% during the course of a year if declines continue. Unfortunately, the pandemic has also caused a lot of people to move out of California. In fact, around 7% of the population has left since that started. On top of this, California's tech industry has also undertaken a massive hit. Interest rates have been high and demand has been decreasing, which means that the market for tech businesses in the state has dropped as well. All of these factors combined put the California housing market in a very precarious position. It's very possible that there could be a significant crash if things do not improve. Number 4, Los Angeles, California. The real estate market in Los Angeles saw a notable 2.2% decline in activity, potentially leading to an annualized decrease of over 25%. Posing a significant setback for the industry. This reduction ranks as the 7th largest decline among all states in the US, underscoring the severity of the situation. This decline could have several reasons. One reason could be that the cost of living in Los Angeles continues to be high, making it challenging for people to purchase homes. Additionally, the pandemic-induced economic slowdown may have dampened interest rates in real estate investments, leaving fewer buyers on the market. Number 5, San Diego, California. San Diego has went through a notable drop in the real estate industry. All cities have experienced a decline in the housing market over the month of September. If this trend continues consistently for a year, the housing market in California will have fallen a negative 25%. Despite this decline, real estate experts forecast that the situation could become worse, as many Californians do not earn enough to cover their mortgages. This is particularly problematic in the housing market, where interest rates are high. As a result, numerous prospective buyers are refraining from purchasing homes, exacerbating the situation. This leads to a decrease in home prices, and if this pattern persists, property values in California will continue to decline over time. Unfortunately, this situation is not good for anyone invested in the real estate market of California. It points to a future when California's real estate industry could experience an even more significant downward crash. Number 6, Provo, Utah. Home values in this city dropped a whopping 2.5% in 2023. Experts predict that the decline will continue and that over the next year, the value of homes in Provo could drop by as much as 30%. Despite this trend, the city has still a large inventory of expensive houses. As a result, demand for these properties is dwindling. Prospective home buyers are finding it difficult to afford these homes due to high interest rates and mortgages that are hard to come by. Number 7, Boulder, Colorado. Boulder, Colorado just went through a rough patch, and the real estate market's prices in that city have dropped by a whopping 3%, making it the 4th largest drop in the city's history. The worst part, the trend is showing no signs of slowing down, as it could even hit an annual decline of 36%. If you're not familiar with real estate, let me give you a little bit of context. A decline of that magnitude is basically unheard of, and it's pretty scary to think about. Imagine if every year your house lost more than 1/3 of its value. This downturn isn't just bad, it's record-breaking. According to Zillow, Boulder's 3% decline is the biggest drop the city has ever seen, and we're not just talking about recent history either. This beats every housing bubble that America has experienced throughout history. Number 8, Salt Lake City. Salt Lake City just experiencing a pretty substantial drop in home values, with prices going down about 3.4%. That's quite a bit. What's even more concerning is that it isn't an isolated incident. The West Coast as a whole has been seeing some major crashes in the housing industry lately, with the biggest and fastest ones happening right along the coast. Experts are predicting that if this trend continues, we could see prices dropping even further and more rapidly over the coming months. Number 9, Austin, Texas. Apparently, the housing industry has been hit hard in Austin, Texas, and is not just once, but twice in the last month. The value of houses has plummeted by 3.5%. And if this trend continues, we're looking at an annualized pace of dropping 42%. What's worse is that this downward spiral may not be over yet. We're just experiencing the first wave of a recession, and combined with the increase in interest rates by the Federal Reserve back in November of 2008, the decline was only at 1.7%, but now it's a whopping 3.5%. Number 10, San Jose, California. Housing prices have dropped by 4.3% in San Jose, with the possibility of an annualized pace of over 50% if this downward trend persists. These findings are part of a broader pattern that we're seeing in California, which has been hit particularly hard by a housing crash catastrophe. Even though California has suffered the most significant housing crash in recent history, with declines as high as 4.3%, there are still some cities that have avoided being affected at all. According to data from Zillow, some cities have not been affected by the crash. Analysts say that many people have been priced out of the market because of increased home costs, higher interest rates, and stricter lending rules. Moreover, people are not always willing to move to more affordable areas. Although we can't predict how much of the decline of these unaffected areas we will experience, it's safe to say that we're all headed towards a prolonged housing crash that will impact every state in the US overall. While it's notable, not the best news to hear, that there's a housing crisis in America, it is essential to understand that all hope is not lost. If you want to take advantage of getting ready and having an unfair advantage over others that do not see this housing crash taking place right now, I will put a few discount links down below of 80% off to the housing crash course.